and we're going to go through just a continuation of this ongoing series where we're trying to navigate the twists and turns in the market. And so I want to point this out. I'm sure everyone here has seen charts like this recently. And this is the S&P 500 on a daily time frame. And this is the very simple downtrend line that's marked this ongoing bear market. And we failed at or around it numerous times. And here we are. It looks like we're setting up a breakout and everyone's getting bulled up. And if you've been with us for a while, since November, we've been anticipating a move to 4,300, 4,400 S&P 500. So this is no surprise to us. However, there are some warning signs suggesting that it may not happen imminently, that there might be a bit of a pullback before this happens. Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And this is our weekly broad market update. First and foremost, we are getting a nice little divergence on the daily as we're making a higher high. That's usually a warning. But if we kind of go further, these big moves, these big breakout moves, think about it in reverse. Okay, so in 2022, we had two really big breakdown moves. I would say early January, and then I would say August, September. I mean, these were very powerful trends in the opposite direction. And what we're looking for is a powerful trend in the upward trajectory. So the common trait between these big breakout and breakdown moves is all markets and stocks are moving together. If you go back during August and September, look at any market in Europe, Canada, Japan, Australia, look at any sector in the US, any stock in the US, they were all trending down in the same direction. There was no divergences. It was a unified trend. Now we were able to really time this bottom and go on a buying spree October 13th and take off our hedges because the opposite pattern was emerging. We're seeing divergences. We're seeing stocks bottom across multiple markets and making higher lows as the S&P was making a lower low. So when you see those divergences happening, it's usually a warning that a trend is changing. Something is not right. So if we are getting this big breakout move, I would expect to be seeing a similar pattern across multiple markets, right? We'd be wanting to see these kind of breakout setups happening across multiple markets. And I'm just not seeing that yet. Let me go over what I mean by that. So we will take, we'll go to the French market first. And so off the low, we have a clear 5-wave pattern. That's long-term bullish. When you see 5 waves off the low, that means it's setting up for a bigger uptrend. So long-term, very bullish. However, what follows 5 waves up is usually a 3-wave pullback that retraces somewhere in this range right here. That's a nice little pullback right there. So we have 5 waves completing on weakening momentum. That's usually not breakout scenario. That's usually more of like a warning that we have a pullback to deal with before we can get a bigger breakout. If we take a look at the UK, or actually we'll go to the German DAX, same situation, 5 waves off the low, weakening momentum, right? And so what usually follows this 5-wave pattern, same thing, 3-wave pullback. So all across Europe, I'm seeing this. Take a look at the UK. This is on a weekly chart. So this is off the COVID low. We have 5 waves off the COVID low, 3, 4, 5. It just reclaimed its COVID, I mean, not COVID. It just reclaimed its 2022 high. So once again, what follows 5 waves is usually a 3-wave pullback. And this is happening on weak momentum on a weekly chart. So it's a little bit more important to see that pattern playing out. And so these are just a few of the global markets that don't look like the S&P 500 and NASDAQ 100. Excuse me, S&P 500 and NASDAQ 100, who look like they're ready to break out. Yet you look across the world and there's a lot of markets that are flashing warning signs. If we go into the US, here's just a couple markets. This is iShares MTUM. This is just what I use. One of the markets I use for a high beta proxy. It's just a broad index around high beta. So it's not just geared towards tech. But take a look at this. I mean, this does not look bullish. This looks like a downward trend within a range. And so you take the S&P 500 and NASDAQ 100, they're trending up right now, but these high beta stocks are not participating in that. They're suggesting that there's more downside to come. And then we take a look at Apple. And this is Apple, right here, the bar chart versus the Dow Jones in blue. And these two have been trading in lockstep this entire bear market in recovery until right here. All of a sudden, the Dow continues in an uptrend and Apple continues its bear market, making lower lows. And so, as you can see, this it's not like I'm showing you some esoteric cloud stock here. I mean, Apple is 6% of the S&P 500. I mean, that's bigger than Berkshire Hathaway, Johnson & Johnson, United Healthcare, Home Depot combined. So it's a really big deal when you see the biggest stock in the US flashing this kind of a warning sign. And so my point being is, the imminent breakout theory, I'm not on board with that yet. I want to see these divergences really play out. And I want to see an alignment before we get on board with that, though I do believe it's going to be happening. So what could be playing out? So this is a chart we've been showing for quite a while. This kind of A, B, C up into the 4,300 range. So there's two scenarios that I see playing out right now. Really three, but I'm just going to stick with two right now. So we have A, B, and we're in the early stages of the C wave. Now, this C wave is going to be a 5-wave move. It should be a powerful, exciting upward move, and it will play out in 5 waves. So follow the blue here. This is our first wave. This was our second wave, and this is the first wave of the larger third wave. So you want to be on board for the third wave. That's the most powerful part of any trend. So it's basically we're setting up for the breakout and go. And so what this suggests is that we have a pullback to 39.8, 39.45. I would say this is like my alternative scenario. We have a bit of cash on the sidelines, and we're going to start preparing for both scenarios. We layer into some stocks we're tracking if this plays out. What I think is playing out is this is our first wave, and then we're in the middle of this larger second wave. I think it's playing out as a 1, 2, 3 or an A, B, C, and that C wave should take us back to the 38.6, 38.3 range. And if this does play out, that's a tremendous buying opportunity for 2023, if you ask me. There is a scenario where we head down to the below 37.95. Just keep that level in the back of your head. If this plays out, 37.95 has to hold, or we're going down to 3,600. But based off of the sentiment, the kind of rising bullish sentiment in the market, this is one of these two is what we're looking for. But to kind of play it out, we're expecting a dip or a bigger pullback, both of which would be times to be buying, in my opinion. If we do have a dip or bigger pullback, then break out above the top of this move right here, which is like around 40-40, you can say 40-40, 40-50. You do not want to be short. You do not want to be betting against this trend. You go long and you hang on until you hit our targets. And so we think this is definitely setting up for 2023, just like we were anticipating in November. So I hope that was helpful. We do this every week. You can sign up in my YouTube channel right here and just below. And we also do in-depth fundamental and technical analysis on a multitude of tech stocks and a couple of crypto coins. We basically run a live tech portfolio in real time and provide entries, exits, justifications on a fundamental and technical basis on why we're doing what we're doing. And you can sign up at iofund.com. Thank you very much, and hope you have a good week.